Welcome back. Well, the markets are moving towards the low point of the day. We're down close to around 60 points as we speak. But we've been chatting with various corporates, and let's get straight to the management of Kajaria Ceramics. They posted a weak set of numbers over the weekend. The revenue growth was subdued. The volume growth as well was subdued. Though there was some bit of improvement on margins, the question is, can it improve further from here on? To understand that and more, we're joined by Mr. Ashok Kajaria, the Chairman and Managing Director at Kajaria Ceramics. Hi, Mr. Kajaria. Good morning. Thanks so much for joining in. Well, give us a couple of numbers. One is on the margin front. Now, the input cost is cooling off, but I'm not sure whether or not you can increase your selling price as well. Putting both these two factors together, could you tell us what kind of a margin improvement should we look at in Q4? And also on the volume front, you're guiding, I think, for high teen growth for FY24. Are you being conservative or are you being a little bit ambitious?
See, two things. One, as far as the cost is concerned, gas prices have stabilized, and also we have started using biofuels, which has been allowed now. So as a result, cost of fuel will come down, has already come down from the month of December. And going forward, we see an improvement in margin for Q4. What we are seeing is the margin for Q4, EBITDA margin should be 14% plus. As far as the volumes are concerned, for first 9 months, the quarter which has just gone by has been very tough. The volume increase has only been 2%. For the first 9 months, we have done 12% volume growth. And I think Q4, we should see about 9 to 10% volume growth compared to last quarter.
Okay, so 9 to 10% volume growth in Q4 is what you're expecting. But you said that the environment is very tough, Mr. Kajaria. So do you get a sense that perhaps you might have to scale down your full year guidance? 15 to 20% was what you've guided for the full year. What do you think you could end the year with? And does FY24 look like it could be a challenging year for you?
See, already guidance has come down in the sense that I have given you the numbers for the first 9 months and also for the last quarter. And for the full year, our volume should be around 10 to 11% max. Next year, we are looking at 13 to 15% volume growth. I think a lot of corrections which has come in the gas scenario, because we are using alternate fuels also. So the cost comes down. The pressure has been cut in gas also. I think next year should be better than what we have done this year.
Could you, Mr. Kajaria, good morning, give us a sense of, where is demand, as you see it, which pockets is demand looking strong, domestic exports, purely on the demand side, how are things looking, if you can give us some color?
See, as far as Kajaria is concerned, we are more domestic oriented. I think we are selling almost 98% in the local market, 2% in exports. And demand has started picking up. You see, October was very tough in the last quarter because of holidays. And November, December, demand did pick up. And January onwards, things are better. And I'm sure that going forward, next year should be much, much better than what we have done this year. As far as exports are concerned, Kajaria hardly does. But we have just opened a Dubai operations where we are trying to increase exports to Middle East and some African countries. But if you look at the overall scenario, exports will not be more than 3 to 4% or maximum 5% as far as Kajaria is concerned. But so as a country, the exports are much, much better. Last year, overall, we did exports of 12,700 crores. This year, we are looking at a scenario where exports should be around 16,000 crores.
Okay. All right.
Just one more question, Nigel. So you said volume growth is, you said 13 to 14% in FY24, and sales growth should be higher, 17 to 20%. Is that, are those correct numbers to look at?
Yeah, volume growth, we are looking at 13 to 15%, as rightly said by you, and revenue growth should be anywhere between 16 to 17, 18%.
17. Okay. All right. Mr. Kajaria, I just had this query. There are some new unorganized players who are coming about in your business itself. And the exports market is slowing down a little bit, though on the whole it will look much better. If they are forced to sell in the domestic market, will that impact business? I just wanted your opinion on this.
No, already there are so many players in Morbi, as we are aware, there are almost 600 players. They've been doing their best, but it's not that easy to come in the domestic market and get out. But definitely they will focus more on exports because exports have picked up, one. Secondly, India is again a very competitive player in the international scenario after China. And we are as competitive and getting as competitive as China. So exports will pick up, and industry size, which is currently about 52,000 crores. We are looking at a scenario March 23, it should be about 57,000 crores.
Okay, so that's not a threat to you then. You're clearly spelling that out. What about the bathware segment? I recall that you had told us that you want to scale to around 500 crores by FY24. Still on the cards?
We should be anywhere between 450 to 500 crores in FY24.
Okay. 450 to 500 crores in the bathware segment. Got that. You also spoke about how you have increased discounts to dealers in order to pass on, your products, and that speaks a bit about the challenges and perhaps the competitive environment as well. Can you give us some numbers? What were the discounts earlier? How much have they gone up by? And what would that mean in terms of your operational performance and the pressure that you could face there?
See, the moment market improves, our biggest threat has been from July to October has been the gas prices and gas cut. And once this has improved, I think that scenario will water down as far as discounts are concerned, looking at the scenario. Prices will definitely not go up, but I can tell you that margins will improve going forward. What we are talking about Q4, I said 14% plus, and going forward in the next financial year, we are definitely looking anywhere between 15% plus as far as EBITDA margins are concerned.
Okay, so 15% plus EBITDA margins next year. Just a quick word on, your new capacities as well. You have put on some capacities on board in Gailpur and in Secunderabad. Can you tell us what is the kind of additional revenue that you would expect from there once these capacities come on stream?
See, Secunderabad, we are adding a capacity where we are going to make value-added types, what we have already done in Kalahasti in Andhra. And as far as Gailpur is concerned, the plant which we are modernizing is a 25-year-old plant. Normally in this industry, people modernize in 10 to 15 years. We have used the skills for 25 years and we are modernizing, and which is a small cost of 51 crores. Secunderabad is going to cost us about 80 crores. But next year, as I said, we are looking at a volume growth of 13 to 15% because some capacity is already there, some we will outsource, and revenue growth of anywhere between 16 to 18%.
Okay, all right. Well, thanks a lot for that, Mr. Kajaria. It is tough times and it's showcasing in your numbers and in the stock price as well. But hopefully you'll emerge out of this situation soon. Thanks a lot for joining in. That's Kajaria Ceramics saying that the environment has become